Some Santa Barbara homeowners who bought decades ago are sitting on multi-million dollars or more of gain and a tax bill that they never saw coming. And the good news, there are completely legal ways to shrink and sometimes eliminate capital gains taxes when you sell. I'm going to walk you through those in plain English. So we're going to start with the big break, Section 121 exclusion. The Section 121 exclusion lets a single homeowner exclude up to $250,000 of gain and a married couple filing jointly up to $500,000 in gain when selling a primary residence that they have owned and lived in for at least 2 of the 5 previous years. And this exclusion remains in effect in 2026 and has not changed since 1997. That is the foundation. If your gain is under that exclusion amount, you may own nothing at all. And the catch in a market like ours is that longtime homeowners often blow right past that. So what happens above the exclusion? For 2026, gain above Section 121 exclusion is taxed federally at 0, 15, or 20%, depending on income, and high earners may owe an additional 3.8% net investment income tax for a top federal rate of 23.8%. California does not have a separate capital gains rate. It taxes the gain above that exclusion as ordinary income at rates up to 13.3% in 2026. So in California, the conversation is really federal plus state, and knowing which bracket you land in is half the battle. And the shortcut to that is visiting your CPA. So when it comes to your cost basis, your gain is really the sale price minus your basis. And the higher your basis, the smaller your taxable gain. Most homeowners undercount this. Capital improvements add to your basis. So a new roof, an addition, kitchen remodel, pool, solar, permitted ADU. And then there's also buying and selling costs. They count as well. And that's going to be your agent's commission, title fees, transfer tax, certain closing costs. You really want to keep those in mind, as that's just your first lever. Your second lever is going to be using the rules built for life events, and a surviving spouse can claim the full $500,000 home sale exclusion if the home is sold within 2 years of the spouse's death. A partial Section 121 exclusion is available if you sell before meeting that 2-year test because of a job change, a health issue, or other unforeseen circumstances. The third lever, this is the one that erases gain, and that's the stepped up cost basis. So when a home is inherited, its cost basis resets to fair market value at the time of death, which gives us a stepped up basis, which can eliminate capital gains tax on all the appreciation during the prior owner's lifetime. This is enormous in Santa Barbara, and sometimes it's the smartest tax move that you can make by not selling it at all during your lifetime, but holding onto it and letting your heirs inherit it at today's value. And this is a family decision and exactly the kind of trade-off that we map out together. When it comes to timing and structure, this will be your fourth lever. Time the sale into a lower income year. For example, after retirement and before required minimum distributions ramp up to land in that 0% or 15% tax bracket. So in 2026, a married couple with taxable income up to $98,900 can pay 0% federal on long-term gains. Another trick would be to use your financial planner and CPA to do an installment sale, because the installment sale spreads the gain and the tax across multiple years. If the home is converted into a rental, you may be able to combine Section 121 exclusion with a 1031 exchange. And that's going to be a very complicated situation, but I do cover 1031 exchanges in separate videos. So, for example, if a couple here in Santa Barbara bought in one of the neighborhoods up the street in 1994 for $410,000, and they are selling in 2026 for, let's just say, 2.3 million, with about $250,000 of documented improvements and roughly 140,000 in selling costs. Well, their gain is going to be about 1.5 million. And if you subtract the $500,000 exclusion, roughly 1 million of that is taxable. Now you see why these levers matter, because every dollar of basis and every bracket decision is quite literally real money. So before you list, get your plan right, because some of these moves only work if you set them up in advance. Download my free guide at the link below, or book a strategy session with me. We'll look at your basis, we'll look at your bracket, we'll combine forces with your power team of 4 and get your options together. I can be reached via cell, phone call, or text 805-456-3667. Talk to you soon.